The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, boys and girls, looking good, Billy Ray, feeling good, Lewis. We're going to start out the show today with a brief description of my view of what happened during the debates yesterday. Okay, now that we're finished with that segment, we're going to go right into the DAX and take a look at it. As you can see, it opened a little bit higher. Yeah, hold on, folks. There's something going crazy. There it is. The gold is breaking down again. We'll cover that in just a minute, but it just went through the 38% retracement that it made at 1333. That's not a good sign, folks. We'll go through that in just a minute. Let's just get through the DAX here because, as you can see, it opened a bit higher. And then, of course, it just literally became unglued. Folks, that has nothing to do with the election or anything like that, in my opinion. It has to do with Deutsche Bank. Deutsche Bank is gapping down again. There are problems there bigger than they even want to think about. When this much selling is coming in with no support, no matter whether Merkel says she's not going to help or not, we know that's not true, because when that stock gets to $3 or $4 or $5, wherever it's going, there will be some help coming in. They're not going to let the biggest flagship bank of Germany go under. And if they did, they would cause a great deal of problems with a whole lot of smaller banks that depend on the cross trading of what Deutsche Bank has done with those. Because if they don't honor those trades, there's the too big to fail segment, and that's it. So just keep in mind that this is a big thing. Now, we're seeing something also very interesting that our good friend Mr. Z pointed out in the den this morning, and that is the fact that the German Bund, which is the equivalent to our 30-year bond, you'll notice that it has been going up for about 2 weeks, and we've now made new highs. We just did that this morning. We're approaching the 1.27 level at the 166.70 level in the German bond. But the important thing is, folks, if this were if this were our 30-year bond, we would be looking at something near the 170 to 174 level. So this is an important thing. People are putting money, and believe me, this is negative. So, they're not actually giving these things away because it costs you money to own the darn things. I'd rather keep my money in the back seat of the car or, under a mattress, but that's neither here nor there. So if there is some big things happening, by the way, the only surprise that I saw last night was the fact that Mr. Trump went after Janet Yellen. I know he did that off the cuff, but that's something that I would have really told him to stay away from that level of politics, because they say that they are non-political, even though they are a private bank located on Pennsylvania Avenue. I think that, that was a mistake. But believe me, it was, I don't know. Something is wrong in Denmark. That's all they say. And I love Denmark, and there's nothing really wrong with Denmark. I think that was Shakespeare that said that. Let's get on to the markets. Let's try to focus on that today because we've got some really big things happening. Let's get on to the gold and silver. We did have some minor resistance yesterday up there at that 78% level in the gold that we talked about, quite a bit yesterday because we had the lower highs. And we'll take a quick look at that again just to review it because we did get up to the 1345 level very briefly, which was, again, we had been at the same level here for about 3 days. And now we've started to back off. What happened last night was that let's just bring up the gold and silver. I'll show you the difference between the two because gold was trying to, lead the parade, but they really couldn't. They really couldn't do it. As you can see, this is a today's action based on the European trading and early morning U.S. trading. But as you can see here, we had a 135 pattern that has failed. What we've done here is once we broke through that, that gave us a profit objective of that 1333, which was the 1.27 expansion of that move, and it was also a 382 of the last low. So watch this very, very carefully here. In the any move below 1330 in the gold to me would be telling you that we're heading down towards that 1275 level, and we'll be able to see it. If you look at the right hand side of this chart, I put gold and silver side by side so you can see the difference. You'll notice that silver was able to make an ABC Gartley pattern today, early in the morning, up around the 1962 level. It was a perfect 61% retracement, but then it gave up the ghost. And as you can see, once it broke below that 1950, that set up a profit objective of, quite a bit lower. So these have been, moving to the downside. We were looking for a potential breakout in this. Maybe it'll come, but right now it looks very, very scary. We really need gold to get above the 1360 level, which is $30 away from where we are now, and that's going to be no small task. That number in the silver is going to be around 20.80 per ounce, well over $1 an ounce from where we are, right now, $1.50 an ounce. So these markets are not ready to go up yet, even though they look good technically. They're not acting that good as you watch them unfold each day. That's just not happening. We have a lot of things happening in the U.S. dollar, of course, because the dollar is strengthening again, and the euro is weakening. There's no surprise there, and the other one that's not a surprise, but is weakening even more so, of course, is the yen versus the dollar. And if you'll take a look at this next chart, you're going to see a situation that if we get below par, and we're very, very close to that right now, we're trading at par 28. But you'll notice several days ago, we made that really nice 135 pattern that came, just right at near the 78% retracement. We rallied for 2 days, and look what's happened. We're already getting ready to make new lows. Folks, that's really bearish. You've got a downtrend line going way back, to the beginning of the year. And if you can see it there from May, June, July, August, September, nothing but lower highs and lower lows. This had a chance to do it, and it rallied a little bit, but now it's failing again, and that gives us a price objective of 95. And if you look at that, which we did yesterday on the weekly basis, that's a very significant retracement. I believe 61% of the whole move from 2011, to 2015. So it's going to be interesting here on the dollar yen what really happens, but we're so close to going below par that it's going to be very interesting. And I believe that par has a psychological level too. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, let's take a quick look here at Deutsche Bank again. This is the one we looked at yesterday. We're down lower today. I don't believe we've taken out this low yet, but we are very close to $11 a share. We hit 11.18 a share yesterday. The 1.618 number of these last several months comes in at 111.08. That's why the $11 a share level is so very, very important, because below that there is nothing but quicksand, and that means you're looking at a Lehman Brothers type situation. You have lower highs, lower lows for well over a year and a half, and now we're starting to accelerate to the downside. So below $11, I believe you're going to see Deutsche Bank down into the $3 to $5 per share area, much like we did with Bank of America back in 2009. I believe it got to 477 on a fast tick one day as the low, and then it turned around, and of course, went up quite a bit. So Deutsche Bank has a chance, but it's basically hanging on to a thread, and that thread is on fire. So it just looks very, very bad if we get below $11 a share. This was very similar to the type action that we had in Enron, WorldCom, some of the others that didn't do very well, Eastman Kodak. It's when they break those 1.618 expansion levels, they're basically, out into the stratosphere where there's just no oxygen there to keep them alive, and they just go to zero. Remember, during the 90s, folks don't remember this, but if you read a little bit of history on this, it's very interesting. But during the big the panic of 1929 that started on September 3rd, by the time we got into 1936 and 1938, and the bottom was on July the 5th of 1932. It was a 2.5-year down move, but during the 30s, we lost half of the Dow stocks. Were in bankruptcy, and these were times where we had some of the greatest inventions ever: electricity, automobiles, telephones, radio. Well, radio was available, but it was making it commercially available. TV was right around the corner, so these were tremendous inventions, and yet there was still a major correction. So just keep in mind that these things can happen. So just be a little bit careful in here. I've had a question here from someone in the den about this level of a 1333. In the gold. If you'll listen to John Logan this morning, that was the first thing he talked about right out of the box, was the fact that 1333 was such a very important level. And it is a 382 of the last low that we made 3.5 weeks ago, folks. So you must pay attention to that level. We've taken it out by just a little bit, but that's really nothing more than a few stops getting hit, in my opinion. The low's been within a half a dollar, the exact number, so it's still pretty close. Anything below 1330, $3 below that number would tell us that it has failed, and now we're heading down, most probably to that 1275 level, which has been our long-term price objective on this move in gold. It really had a chance, folks, coming into this week. We were up around the 1340, about $15 from where we are right now. We're on 1347, 1348, and then of course it started to back off, and now it stopped. Now this could change in a heartbeat, and it could take off and break out to the upside, and if it does, we have a place that we've got to find an entry point where it's not going to be too much of a risk to get in it. But if we do that, then that's telling us that we're ready to go a whole lot higher. But frankly, that is not happening right now, and so I don't think you want to be involved unless you want to be involved, from the short side, and that's probably, the side to be in. Now, the next thing we want to cover here is the crude oil market. This is what we were looking at last night during the debate. You'll take a look at this, that the market had went up and made a 78% retracement up there. And then you can see it had a Gartley pattern to come in around the $45 per barrel level. The problem is that you're looking at this larger ABCD structure over the last 3 or 4 days that gives a really nice target, again, right near the 61% retracement, just a little bit below $44 a barrel, around 43.90, and below 43.90. If that fails, you're looking somewhere probably around $39 would be my guess. So this is a very interesting pattern because it's taken 4 days to form. And the other thing is we have going on, folks, is you realize that tomorrow we do have a new moon, and that usually brings in a lot of extra volatility like we needed in some things and don't in others. But it's going to be a pretty active end of the week, I believe, because of the fact that it is coming in to the worst month of the year, which is September. And here we're looking at the spot where we could be looking at. One other thing that I wanted to correct, yesterday when I was on the air, someone was asking me, what was that ABCD pattern that I was looking at in the S&P E-mini, and we'll look at that in just a second. But frankly, what I did was I said 1980, and I should have meant 2080 is what I was looking for. 2080 was the handle that I was trying to pick, but I looked at 1980, and that was certainly the wrong thing to do. So what we're going to go now is we're going to look at the oil market where we were this morning just a little bit when we came on the air. We were hovering at this 61% retracement very nicely, and of course once we went below that and heading down to the target that we're looking for, we went down to that 4470 level, which is the 78% level. And now it looks like we got another $1 a barrel to go lower to get down to that ABCD pattern. We might hit that either today or tomorrow, but that's a spot to really take a look at the oil from the long side, because that will be a Gartley on a longer term pattern going back 240 minutes or 4 hours. So all of that would fit in nicely for a price at around $43.95 in the oil. So it's not in a buy zone yet, but we could be looking at something a little bit a little bit lower, at least before, we get off to that level. That's the main thing that we want to watch with this oil market. We're seeing the same thing happen in the heating oil and also in the gasoline. Folks, if these patterns keep failing, we're looking at some serious deflation in here, and that would that would not be a good thing. Well, I mean, deflation is bad, but inflation can even be worse. You like to have things stay either about the same, but food costs maybe go down a little bit, but that never happens. So it's the main thing is to keep an eye on what we're going to be doing here with some of these major commodities like soybeans, wheat, and corn, and oil, and also gold and silver, because if they all start to break down, that's going to tell us that this dollar is going to get very, very strong and get above the 99 level, and then it's off to 98. It'll be off to the races. So this is what we're looking at this morning, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a quick look here at the E-mini S&P today, give you a better idea of that target that we're looking at here at 2080. If you'll look at the high that we made back on September the 8th, we immediately dropped all the way down to 21. We dropped down 90 handles. And so if you will go over to point C, which is up there on the 22nd when we had the autumn equinox that came in within 3 minutes of the exact high during that time. It would be a C point. So if you take A, B at 90 and you take your C point, and then that's is around 2170, and you subtract that from you see you're going to get down to pretty much right at 2080. That would get you the ABCD structure of what you're looking at. Now, last night, as you can see here, we hit a beautiful 61% retracement and 78% retracement right as the debate had started. And then, of course, the market rallied up to a 50% retracement. And then all night long, it's been giving it back. And we were up over 120 in the Dow. And now we've gone negative. And so, this sets up this ABCD pattern that you can see here, with the S&P, which would take us to 2117. And failing that, then you're looking at the 2080 level. So this is what we're watching. Now, the DAX, as you remember, the first chart that we put in here this morning has already broken down, below that 78% level and appears to be heading even lower. One of the most interesting charts that John Logan put in his thing today was the first chart was the long-term monthly chart of the DAX. And as you can see, this has been in a downtrend for several years. And if you'll notice those three declining tops, that's that 135 pattern that we like to look at, because you're forced to trade in the direction of the trend. And with wave 1, wave 3, and wave 5 all heading down, this is telling you that we could be going a great deal lower here in the DAX. Short term, I certainly could see that, and we're seeing the same thing here in the S&P 500. The NASDAQ, which had been the leader, has given up almost 100 points. It gave up 90 points as of yesterday, and it looks like we're going to be heading down a little bit. Now, we could still hold this level, but frankly, it looks like we do want to go a little bit lower. And if we see the yen dollar get below 100, I believe that's going to bring in some increased selling. But we're seeing all across all asset classes, with the exception of Treasury bonds. If you look at any of the commodities, they're under severe attack, and yet the bonds, which could be the flight to quality, are moving higher. Once we went above 168.20 in the Treasury bonds, that told us that we were breaking above the 382 level, telling us that we wanted, to get a little bit higher. I think we talked a little bit about that yesterday. We cover so much stuff here that you'll see that the next level we're looking at, we're trading at 169.18 now, so we look like we're going to make 170.22, which is the 61% retracement, very, very easily. If you look to the left of that current place where we are now, where it says 382, if you look at the left of that, you'll see the 135 pattern again, where you have the lower highs that are very symmetrical. All the waves are exactly 786 of the previous wave. In other words, 3 is 786 of 1, and 5 is 786 of 3. And that's just telling you that there's equal moves in the market. That's all you're really looking for. So when you see that 135 pattern, you're forced to trade in the direction of a downtrend. At that point, you don't have to risk very much. But remember, they do fail. We had one of those in silver last night. We had one of those in gold. But frankly, you don't have to risk hardly anything. Gold is a $130,000 contract, and you can trade that with a $3 stop. You can't do that with a foreign exchange cross rate. It's just you can't do it. But gold is able to trade with a $3 stop for on a shorter term pattern like that. So that's what we try to do, is to use these patterns to fit in what we're looking at and see what's going on. I have a request here to take a look at the euro yen, and I will be able to look at that. We have another question. Will that 2100 level be hit by Friday? This is only Tuesday, so Friday is not much of an outlier. It really could get there very, very quickly. And given what's happening in Germany with the Deutschmark folks, do not be surprised if something really crazy comes out of there that I don't know what it could be, but people are selling this stock with abandon. And we get it below $11 a share, it's in big trouble. That's that's really what you're really trying to look at, and you want to be able to keep that. I know. Excuse me, one second. The euro yen looks very similar in chart pattern to the 3 drive pattern that we're seeing in the pound, but I'll try to get that when we come up to the next break in the next couple of minutes, because I need to go to the platform to pull up the cross rates. I keep them on a different platform in order to get the chart right, and then I'll be able to look at it. But the dollar, like we said many times before, well, let's just quickly take a quick look at the euro, because we've been talking about this for quite some time. Yesterday, the market went right up and again made one of those really nice 135 patterns, and now we're trading below 112 already, getting ready to take out that last week's low at 111.96. And, below that sets up an ABCD structure all the way down to 111.50, down another, $500 or $600 from where it is right now. So this is one of those that happens to be in a downtrend verified by that 135. But again, if this market should turn around and get above, 112.70, then that's telling you that it's breaking out to the upside. And then you have a place to, ride it up higher, because once it does that, then it's getting ready to go. We were looking for this potential to happen in the gold market, folks, but it just didn't perform right. It didn't give you the thrust that you needed, to get above it, and that's the main thing that you want to be watching. So this is the important thing to do, is watch these levels, but you have to use a little bit of common sense when you're doing it, because as you can see, you can go down and look at some of these things like gold and stuff, and they hit these levels and they bounce a little bit, and then they rally a little bit and they go down and make new lower lows. So you have to be able to, as John Logan talks, find a place to do battle and then put your stop in, because if you don't use a stop, you're telling the market that you know more than it does, and that ain't never going to work. That much I can promise you, because markets are never wrong. Or let's put it this way. As Roy Longstreet said, markets are seldom wrong. Men are often wrong. So remember that the most important cycle that you trade in the markets is that 9-inch cycle, the one from your left ear to your right ear. And if you get that cycle right, the rest of it is real easy. It goes back to the art of war. If you know your enemy, you're very powerful. But if you know yourself, you're omnipotent and you cannot be beaten. So practice on learning what's inside your head and not so much about what's in the enemy's head, which is the market. So just make sure you do the right thing. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're going to take a look now at the euro-yen cross rate. Looking at this weekly chart, you can see it had made a huge Gartley pattern. The problem is that we had no rally off of this. Basically, what you're looking at this euro-yen and it going down, the euro is the short side of the cross rate. The yen is the long side of the cross rate. So you're long the euro, short the yen, and that's what you're looking at. And with this is going down, and the euro going down, you're losing on that side, and that's the main thing. And you could be losing on both sides, but the euro will be losing faster. So that's what happens when you deal with cross rates, is you have to realize it has nothing to do with the U.S. dollar. These are two countries with different currencies. One other major question that I had last night, someone had sent me a very lengthy email telling me that astrology was just absolute baloney and there was no way of proving it empirically that it would make money. I sent this gentleman back a very interesting email that was basically 6 or 7 lines, and I told him to go to Google and type in Tom Pelk. His name is Tom Pelk. That's T-O-M, capital P-E-L-C. And put in Nomura Securities, that's the big Japanese firm, or type in lunar cycles into Google. And you'll see his report going back as far, I believe, as 1885. And if you had bought on the new moon and held it for 7 days during that time, you would have outperformed the S&P 500 by 16 times during that period. Either bull or bear markets, it didn't make any difference. If you just bought on the new moon and held for 7 days, that's how it worked. And all the statistics are there. They've been verified. And so if you don't think astrology works, I don't know. But, that's nothing more, than a 14-day cycle. Maybe that's what it is. But when it triggers on that particular day, that's what happened. So it's a very interesting phenomenon. So there's other ways to prove it, of course, I'm sure, but that's the easiest way when you're talking about money because it's way outperformed, the same thing. 2 years ago, a gentleman asked me a way to try to beat the market, and I told him that. I told him to go to the website and look at it. And I heard from him about 4 months ago, and he said, my God, he said, I can't believe that was right. He said, but with a small part of my portfolio, that's what I've been doing. And he says, it's just been phenomenal. And I said, well, that's what the statistics say. And as they say in old Southern Indiana, liars don't lie, but figures don't lie, but liars do figure, something like that. I don't remember exactly what it was back at old Indiana University back in the day, but it was something very similar to something like that. So anyway, let's get on to the next question that someone had, and that was about the chart of McDonald's. It still looks lower to me. The same thing with Disney. Several people have asked about Twitter. Twitter is in the stages of a bailout, I believe. We've put that chart in here several times here over the last few days because it made that big ABCD pattern up into that level, and that's something that needs to be watched, very, very closely. So that's the main thing that we want to keep in mind as we watch some of these things. The $64 question, of course, will some of these things affect the grains? Because we are into harvest, as you hear from the news, all across the Mississippi Delta, all the way up into Minnesota, and we have tremendous amounts of flooding. Whether that'll affect the grains very much over a long period of time, I don't know. I do know that if we get a freeze between now and the 15th of October, that will affect the bean market. Whether it'll do much or not, I don't know, but it'll affect it somewhat for sure. Well, I shouldn't say for sure, but in previous years, that's what's really happened. Now we had another request for one of our favorite stocks. We haven't heard from Priceline Charlie for a long time. And Charlie, if you're listening, call in. We want to make sure you're okay. But as you can see here, this is Priceline. We've made a double top here from October. It made a higher high, I believe, by about 10 cents back in October from where we are right now. And this is very overbought now with the rest of some of these NASDAQ stocks. So we should start to see a pretty good correction in some of these, in this particular stock to the downside. And if it's equal to the last one, it went from $13.99 to $11.50. So it can easily drop $250. Because when you got a $1,400 stock, 20% of that is $200 and some dollars. So you can see that you can get tremendous volatility. The problem, he's making. I know he's doing very well in Mexico down in La Paz because he buys, stuff with U.S. dollars that are converted into the Mexican peso at it's 19 to 1 now. So he buys it on the cheap and sells it on the dear. And that's the way you do it. He buys, construction equipment that is for sale during auction. He has a buyer waiting for it, when he buys it. There's no brainer. I mean, he has no risk at all. So Priceline Charlie, we're worried about you, but we know you're okay. Just want to make sure you don't get caught in this Priceline if it gets above 1,500 because then it's in no man's land. And you don't want to be in no man's land. That's not a good place to be, when you're trading. So we have to watch these things because they do get a little bit crazy at times. Right now, we've got the market is up a little bit from its lows, but still down a bit on the day. Not very much, just very, very slightly. We did take our early morning lows out at 2133 in the S&P. We got down to 2132.75. There again, that's a really classical mistake that people make is to put their stops at those exact lows, and that's not the place to do it because you just don't want to get caught in that because that's a rookie trap. A neophyte trader will do something like that. Give it an extra $150 or $200 to make sure that the market is heading down. A perfect example of that would have been gold today. It had a beautiful 38% retracement at 1333. It quickly rallied $5 an ounce, and then it went back and made new lows, and now we're several dollars an ounce lower than the 382, which tells us that we're most probably, heading to the downside. So those are just a few things that you want to keep in mind technically if you're trading. Keep your stops away from the old exact highs and lows. Give it a little bit of room. If you can't afford it, then you have to map your strategy just a little bit. Trade a smaller size with a larger stop because one of the main reasons people lose is because they put their stops too close. By the way, today was Mark Douglas's birthday. He would have been 68 today, and it would have been nice to have him with us today, but we lost him a year ago on September the 10th, and this old cowboy misses him all the time, so we'll see someday we'll see him out in the future up there in that trading sky, but what a great guy he was. He certainly helped a whole lot of people. Okay, we have another question regarding the corn market. Corn is making a daily pattern here that should have some very, very strong support at the 325 a bushel, but below 310, it doesn't have any support. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the last chart that we're going to look at today here is the S&P 500 index, the cash index itself. And as you can see here, we have made that 135 pattern last week, right after the Federal Reserve did not raise rates. The market had the big rally, and then, of course, we've given most of that back. In fact, we've given all of it back, and now we're back to where we were, before the Fed said anything. But the fact is that this market has lower highs and lower lows over the past 6 or 7 weeks. Tells us that we are in a short-term downtrend, even though longer term it still looks higher. But as we come into this new moon tomorrow, we should be making a pretty significant bottom just based on statistics. That's really what we have to deal with. Anyway, there's a really strong support ABCD pattern and the E-mini S&P that comes in at right at 2080 to 2090. And that's 2090 would be good enough for me. That's it's 50 points from where it is right now, but that could easily happen over the next few days. So watch that level of 2090 and 2080 in the S&P 500, because that could be a very interesting spot to get long. And if it takes another day or two to get there, that would even be ideal. So these are things that we want to keep our eye on each day. At least I do, because it gives you an idea of where we're coming in the market, and it tells you what you've been doing, to make prices hold up at these levels. Whether you're doing some, work on the facilities of some of these restaurants like McDonald's or whatever, where you're able to, bring customers in with something clean. I don't know, but as I ramble here, at the end of the day, I realize that I've used up all of my quality time, and I'm just trying to finish up the day here. Anyway, keep an eye on that 2146 level in the S&P. That would be the rally back. We're up about 37 in the Dow now after being down about 60. The Nasdaq's up about 21. Gold's down about $13. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.